Good afternoon, ladies and gentlemen, and welcome to Thursday's live trading session. So I have a couple of trades open. I'm long DAX. One of the trades from earlier today, which, to be honest with you, I should have closed earlier during the day when the Dow rallied up towards or just above 34,000. There was probably 5 or 6 pips profit in the DAX trade. I probably should have taken that. The last trade that I've just put on, I'm probably just going to close that down ahead of the open. I prefer to be trading the Dow at this point. So you can see I've just closed that out for about 11 pips, that last trade. I'm just going to look for an entry point here on the Dow. As you'll have guessed from the notes that I've written recently, I'm looking to buy, ideally on a dip, but if we don't see that dip back to 33,900, a level that we bounced off nicely earlier, then I will be a little bit more aggressive and get into the trade. I do still have a gold trade on that, as I mentioned earlier, has been toying with me a little bit. I have thought about cutting it a couple of times when it's got back to 1937 and a half, 1938, but I've been waiting for that little bit extra, and it's never really come through. So I am still short gold, and it's slightly against me. It's been a hectic week, an erratic week. Far too many trades, far too many stops yesterday. I think Monday and Tuesday were particularly good days. Wednesday was obviously a particularly bad day, reversing much of the profits that I'd made the previous days. And then obviously it was the Fed meeting as well. So the Fed meeting and around the Fed meeting isn't something that I generally trade. I did yesterday. It did actually reduce some of the losses. I think I was short in the morning. The market rallied, and unfortunately, I wasn't able to partake in the sell-off that we saw in the Dow just prior to the Fed meeting. But I did manage to take part in some of the rally afterwards. I do apologise today. I'm suffering with a bit of a sore throat, possibly a bit of a cold. Don't think it's anything more than that, so I might end this session just a little bit early. So if we just look at the trades so far for this week, you can see the erratic nature of Wednesday, significant loss, decent steady profits Monday and Tuesday, one stop on Tuesday, one on Monday, and then yesterday we have the total of 7 stops. Now those 7 stops alone, I haven't counted them up, but I think they'll equate to at least 1,000 pips, sorry. So 7 trades there must equate to at least 1,000 pips. Obviously been some good trading in and around that. I look at some of the trades. You've got a couple of Dow trades there, stopping out above 34,000. We fell all the way back down to 33,430 after that, which was a level that I bought. Was getting out of the trades too quickly around that particular Fed meeting, but still with a couple of trades open, 524 points to the good so far this week. That's slightly bigger now. I think that's 535 points with the 2 trades left open. So might come back to that a little bit after we look for a trade around this session. So I'm just going to open up the Dow there. I'm going to take this back to a minute chart just so it exaggerates the types of movement that we're seeing. So you can see that we've been down, and please do send questions through as I'm going through this session. If I don't get round to answering them during this particular session, then I will get back to you over the course of the next few days. So I did have a limit buy in there at 33,897 earlier. I think the low of the day was 33,900, so it missed by 3 points, and then rallied the best part of 45 pips after that. So unfortunate miss on that particular trade. We do have some Bollinger Bands in there. These are only on a minute chart. You can see that we've bounced off this level or just below this level, closer to that 33,900 level a couple of times today. And I'm looking for something similar around the open, to be honest with you. There's a question in there from Ben. I'll just get back to that in a few minutes. We just tried to put a trade in for this particular opening bell. So I was buying earlier at 33,897. I do probably need to be a little bit more aggressive to get into a trade here. Might possibly just put a limit in slightly below the market. So if I go back down and look for a trade at 33,900, we do only have 2 or 3 minutes to the opening bell. So I'm just going to put a buy limit in there at 33,900, which is slightly above the level that I put in earlier. And we'll see if that gets triggered. I am already long DAX. I am already short gold. So if we look back at those, gold still hovering around that 1941 level. The DAX is about 100 pips or so off of the trade that I did this morning. Possibly could be a little bit more aggressive around the Dow and buy there at 33,920 or just below those levels. But we'll stick with that. There's just under a couple of minutes more to go to the opening bell. So I'll read out Ben's question and then we'll get back to it after the opening bell. I've struggled with squaring up the doom and gloom of the news with the significant rallies that are happening. Should I be ignoring it in these crazy times and just focus on technical analysis? The easy answer, Ben, I suppose, and it's a phrase that you'll have certainly heard me mention before. A lot of people recommend you trade what you see rather than what you think, and it's very, very difficult, especially when you have a significant event as we have at the moment, not to have an opinion and to trade off of the back of that. I think the problem is when you get into, especially more so into the opening session in New York, or after the bell in New York, the players are so big that they do determine where the market is going. So when you have Goldman Sachs, JP Morgan and the like, they really can push the market where they like. I've mentioned a few times over the last few days that there's a certain element of bullying going on. I'll try and explain that to you in a few minutes as well, but we're just about to open. We're only about 10 pips away from my buy limit order. There's every chance it will trigger on the bell. Just about 5 or 6 pips away now. Bell's not quite gone, but he's imminent. So I think I will get a fill. I'm very close to it now. And we're open, and it's immediately gone up 30 pips, and I didn't get the fill. That's not the way that it was supposed to work. We missed out there. Probably, I think the bid went down to about 906, and then we bounced up to about 936. So unfortunately, we aren't in the trade at this particular point. I'll continue to watch it for the next couple of minutes. Drifting back lower now, hovering around that 920 level again. If we see a bit of a lift from here, I will probably cancel the order. Don't want to leave it in there too long. Ideally, what I'm looking for is to be able to trade around that opening 5-minute period or so. But if we do see a bit of strength come through in the Dow now, I think the DAX is a little bit more undervalued at these particular levels, around the 14,250 level. But we're hovering around that 920. There's not a great deal of activity. Obviously, yesterday we had the core retail sales numbers, we had the Fed meeting coming in later in the day. So there was plenty of activity, plenty of volatility. As I've mentioned already, I don't usually trade around the Fed number, but was a little bit more active yesterday than I would be. You can see that the DAX has picked up a little bit while I've been talking. So just going back to Ben's question, the old adage is that you trade what you see, not what you think. Sometimes what you think clouds a lot of your decisions from a trading perspective, and especially pre-open over the last couple of weeks, there's been a lot of bullying, and you can see that the market is pushed in one particular direction, and then after attempting to get wherever the bullies want it to get to, the market then turns around and goes in the opposite direction. So I think if you look at the early moves, pretty much every day this week you've seen potentially you might have seen a move to the upside, a level is hit, and then the market reverses and goes back. So I think we're just in that trade, so there you can hear it activating on my machine, and we've bounced nicely off of that level. So we're up 40 pips already on that particular trade. So I'm just going to take what's there. That worked really well. Bounced very nicely, very quickly off that level. I think it was probably I'm not sure in terms of seconds, I didn't have the stopwatch going, but you've seen 40-50 pips there really quickly. So that was a particularly good trade, and we did get in this time after missing out on the last two occasions. So would have been a trade that you could have repeated quite easily and done very well out of, and the market is probably holding its own there around that 33,950 level. So if we drop again towards 33,900, I would be interested. I'm going to keep an eye on gold and how that's moving, and obviously I have a DAX position that's still about 100 pips against me. So just going back to the subject of bullying, so you have seen these fairly dramatic movements. I think the way that I've been trying to look at it during this week is the first move is the false move. That's really the bullies trying to pull out some stops, or maybe squeeze some people into taking losses and pushing a bit of momentum into the market and into the direction that they actually want to go. So you do have to be very careful pre-open, but if you do start to see these sort of patterns, I do like to try and take advantage of them. So you will see that in the morning, if we see a fairly strong open somewhere between about 6:30 and 7, if we see a strong move higher sometime between about 6:30 and 7:30 in the morning, you'll see me sell into it in the belief that it's not going to run away with itself. Timing is very important. If you get in too early, it can be very damaging, and you can be questioning the approach that you're taking. So you do want it to let it run through probably to about 7:30 and just continue to monitor it. So you do often see me taking positions in the opposite direction to that first move. You then see a secondary move which tends to reverse a lot of what you've already seen. We've done, if you're still in that Dow trade from the opening bell, you're up about 80 points at the moment, 85 points or so, and the DAX is picking up a little as well. The only negative for me, unfortunately, is that gold is moving higher as well. I mean, one of the other things that you've seen during the course of this week is that, you know, when all asset classes have been sold off together, and today the majority of them have been bid up together as well. So whereas you would have seen no direct correlation between specific markets, there seems to be an awful lot more at the moment. You know, a lot of asset classes have been sold off fairly aggressively, and people are now starting to buy those back. If you listen to Jerome Powell's comments yesterday, he was very positive in relation to how the economy is performing and how it will perform going forward. And I think that's why we are where we currently are in terms of this particular market, and continuing to see some strength coming through. Just aside from the bullying, I think once you hit into the full market after 2:30 in the afternoon our time, or 1:30 as it is now, the big players really take control. One of the reasons why in an ideal world my business is finished by 2:30, 3 o'clock in the afternoon, because some of that rational thinking, some of that technical analysis that you're looking at may be completely thrown out of the window if JP Morgan or Goldman Sachs have a particularly big trade that they want to put on. I'm sure I've shared with all of you stories before of being in the trading pits 25, 30 years ago, and when JP Morgan walk in, it's best to walk out and let them finish their business, and then the market will return to a degree of normality, and you can start to make some decisions that you'll be more comfortable with. There is that saying also that the market can remain irrational longer than you can remain solvent. That does come into play as well, and that goes back to making sure that you're not showing too much risk to the market in all of the trades that you do. It's interesting, I was speaking with Mark Minervini yesterday, who's the subject of one of the Stock Market Wizards books, and he's very, his success is really based on effective risk management. Yes, you have to get the trades right, but he operates a rule that his maximum loss or his maximum exposure on any particular trade is 8% of his trading account, and that's served him well over the years. He also believes that you have to blow up once to really learn these lessons, and as much as I try to avoid that and help you avoid doing that, sometimes it's those lessons that are the hardest hitting that are the best learned. So I'm going to finish up there because I can feel my voice going. Gold unfortunately has popped up a little bit, so I'm going to persevere with that gold trade. The Dow continues to move a little bit higher, so a bit of confidence there that the DAX may move higher from these levels. I think what you'll see at the end of this particular session is I'll put some stops in on those trades. It is St. Patrick's Day here, so I will be doing some stuff with family this afternoon, so there won't be a great deal of trading. The live trade worked particularly well. I'd love somebody to tell me how many seconds that trade lasted for. It wasn't particularly long. The bounce off of that 33,900 level, off of that Bollinger Band that we were looking at before, was pretty good. The Dow is struggling to break above this 34,000 level. Was trading above it after hours yesterday. My intention first thing this morning, as you will have seen from the trades, was to be short the market. I think with this dip that we've seen, there are opportunities to buy in, and hopefully, there might be one or two more good trades this afternoon. But the Dow was particularly good. I'll leave you there. If you do have questions, fire them through to either Nick or Sam at bullandbearcap.com, and I will respond to you. Thank you very much for joining me.